Good morning, everyone. I'm John Colmel, Chair of the Power Authority, and pleased to have this opportunity to chair this Finance Committee meeting. We have a full squad turnout this morning on our side. Fellow trustees Dennis Trainer, Gonzalez, Lori Wheelock, Lewis Warren, Cecily Morris, Michael Cusick, along with Justin, Adam, and the team scattered in and around White Plains. Should probably start with a moment of silence for the Buffalo Bills because things are going sadly and badly for us, but we'll keep moving and carry on. As always, this meeting's been duly noticed as required by open meetings law. And with that, we'll formally call the meeting to order. We've all had an opportunity to review the materials and the agenda in advance, and unless there's any recommendation for amendment, I'd ask for a motion to adopt the agenda as presented.
So moved. Second.
All in favor?
Aye.
Any opposed? Motion carried. The agenda has been adopted. Primary focus for the meeting today is to spend time on our financial plan, or initial financial plan for the next 4 years. But before we get to that and a few other housekeeping items, as we typically do, we will start in an executive session. So if I could, I'd ask for a motion to conduct an executive session to discuss the financial credit history of the corporation pursuant to Section 105 of the Public Officers Law.
So moved. Second.
I've got a motion and a second and all of that. Karen will sort that out. All in favor? Aye.
Aye.
Aye. Aye.
Any opposed? Motion carried. We will adjourn and be back shortly from exec session. Thank you. All right, we're back. For once, as promised, we kept it brief and are on schedule. If I can, I'd ask for a motion to resume the meeting in open session.
Motion.
Thank
Second,
you, Cecily, Lori, some combination I heard there. All in
Lori
favor?
moved it, I second.
All in favor? Aye.
Aye.
Aye. Aye.
Any opposed? We're back in open session, and as always, assure everyone that no votes were taken during executive session. We've again, as always, have had the opportunity to review the materials in advance, including whether or not we have any conflicts. I assume everyone's responded, and unless there's any other changes that need to be noted, we will commence the agenda. So the primary purpose of this is to review and discuss our 4-year financial plan. We'll do that after some table setting as to where we are in 23 and expectations for the balance of the year. And for all of that, I'll flip the floor to our CFO, Adam Barsky.
Thank you, Chairman. Good morning, trustees, NYPA colleagues, members of the public. Just before we go into the proposed financial plan for the 4 years of 24 to 27, just give an update as to where we are through September. Again, ahead of plan with expenses coming in lower than expected. Some of the margins are coming in also lower than expected, but we have significant ahead of plan in the non-operating income, mostly in interest income based on the higher interest rates. But again, tracking ahead of where the budget had us through the end of September. We haven't been able to incorporate October in yet, but that month sort of came in as a little bit better than budget, but not dramatically so. So we don't see any other deviations, especially with 2 months left. The next slide is our projection to the end of the year. We still show it in the range of 120 to 140, with the sort of base case right now at 130. Same trends hold. Generation margins down slightly from budget. Transmissions flat, and non-utility revenue slightly below budget, with operating expenses coming in also below budget, which results in a net benefit, including the increase in the non-operating income based on the higher interest rates. If there are no other questions on this, we can then roll into the 4-year proposed plan.
So no dramatic changes and trends from what we've seen and what we've talked about otherwise. Adam, is that the punchline?
Yep, we're tracking exactly towards what we've been sort of communicating to the board over the last few months. So we see no deviation from that between now and the end of the year. Potential for some slightly upside, but pretty much should be in line with what we're expecting.
And Adam, if anything, based on your numbers, it feels like you're going to hit more of the base case net income 130 versus the low case. I mean, you feel more confident now in that better number than you did
correct.
even 30 days ago, 60 days ago. Thank you.
That's correct.
He's always playing a little conservative, Louis. You know, he lets it out slowly as the year progresses.
as any exceptional CFO would do.
Exactly right.
Operation. Yep.
Right. Doesn't want to show his hand too early.
Yes.
Just trying to land the plane. Okay, going to the 4-year financial plan. This is the proposed 4-year plan. So this is a preliminary plan, and it is filed with the state. It's made available to the public in 7 different libraries throughout the state for public inspection, and time for discussion around the plan between now and December when it will be approved. So if there are any issues or changes, those can be incorporated in a timely way. Let's go to the next slide. So really, the main sort of executive summary here is that, this financial plan, aside from just making sure we have our regular operating expenses to support our normal operations, is really geared towards, allocating our discretionary resources towards supporting our Vision 2030 strategy plan, while at the same time maintaining all of our financial metrics to ensure that we maintain our stellar AA rating from the rating agencies. So we're trying to, make sure that we operate within all of those parameters, metrics, while achieving our strategy. The net income, that we will expect over the next 4 years, and the related cash flow from that, or the EBITDA, as I would call it, will ensure that we can fund our capital plan. So really, that's what we're really aiming at, is to be able to, operate in such a way that we can generate sufficient funds to meet our capital plan needs, and at the same time control operating expenses and making sure that our rates remain competitive and affordable. This is a $3.1 billion capital plan. It's right up there as probably one of the largest we've ever had, and it also includes a $1.3 billion investment in energy efficiency projects to assist our customers in decarbonization. The growth of our transmission system continues to be the major driver of our capital investments. We have $1.1 billion over the 4 years of this plan, and there will be significant ones coming beyond year 4, as well as within this plan, $537 million invested in our hydro plants to maintain their viability and their life extension, modernization, and ensure that they're available to continue to be the low-cost provider of renewable clean power. Also, again, one of the goals is really maintaining that competitive position in terms of where our rates are for our economic development customers and our governmental customers. We do that by making sure that we're, holding a line on expenses and in a way in which it's reasonable and can be within rates of inflation as a guide, but making sure that we are being prudent as how we allocate our resources. Next slide.
Yeah, Adam, well, go ahead. I'll offer it after this. Go ahead.
Sure. And then just to reiterate what our strategic vision is and what our plan is, it's around preserving, enhancing that value of the hydropower. It's towards decarbonizing our fossil fuel fleet plants. It's being the leading transmission owner and developer and growing our transmission base by 3 to 5 times by 2030. Partnering with the customers in the state to help meet the state's goals of the 70 by 30, and revitalizing the canals and making sure that they are have resilience built in to improve their state of good repair as well. Next.
Yeah, before you jump, Adam, I mean, just as a board, want to make sure everybody's comfortable with how we're capturing the essence of our mission here and why we're doing what we're doing, and how and why we're running the business the way we're running the business. I mean, we're not a public company in terms of looking to optimize returns for shareholders, but we have one shareholder in terms of the state. One would argue we have several million in terms of the residents and those constituents we otherwise serve. So I think this does a nice job of capturing. I want to make sure all of you agree with and are comfortable with the nature of this and the outcomes that we're trying to achieve. Obviously, our ability to raise funding and access the capital markets is critical for us, and ensuring we produce and financial outcomes and results at a level that's appropriate and supports the bond rating that we have and the debt rating, which is critical to all of that, and can otherwise enable achievement of the many objectives that we have and the increasingly diversified array of objectives. And obviously more is being put on our plate in terms of how we scale. So want to ensure all of you, and in particular the 4 new directors, are comfortable with the big picture story here. There's big numbers. We're a multi-billion-dollar institution. Frankly, the nitty-gritty, we're all relying on Adam and his team, but do want to ensure that you as a board are comfortable with the essence of why we're doing what we're doing the way we're doing it. Any thoughts, questions, comments in terms of the 4 years in particular as to the why or the bigger picture connectivity to our strategic vision? Everybody good with all of that?
Trustee Wheelock, I just wanted to add a big thank you, because I agree, Chair. I think this slide alone is so extremely important, really explaining what NYPA's vision is, our mission, but especially the outcomes and benefits. I feel it can be very hard sometimes to really parse out what all the different benefits are from the energy transition, what each project is doing, how they come in cumulatively. And I think it's so important for the public to see and hear this. So I just really want to thank you for putting this in here. And I think if there's any way to really use this slide in future press releases on our website, I think it's such a great culmination of really trying to parse out what our role is, what the outcomes are, and those net benefits for the state. So again, just wanted to thank you.
Appreciate that.
Yeah, Mr. Chair, Trustee Cusick, I just want to echo Lori's sentiments. I just want to say this is, I want to thank Adam and his team. Leading up to this, many of us were briefed on the financial state, and this slide in itself is a good explanation to the many folks who ask us as trustees, what is happening at NYPA and what is the work going in and what are the results. This is a good microcosm of that. And so again, I want to thank the team for what they're doing, because this is rewarding work and we're in interesting times, and having the support of the folks at NYPA to be able to be the messengers of this is just an honor. So thank you to the team for putting this together.
Agree completely. We're supporting, enabling, and in many cases leading, change. And requires that we're financially strong and in a differentiating way. But clarity as to the why is always important. So that's why I'm just pausing here for a couple minutes to make sure all of us are comfortable with how the why is positioned here. All right. Anyone else? Dennis,
Chairman
Laurie,
Canal,
Louis. Yep, Louis.
just wanted to add that I also think that the Vision 2030 and the strategic priorities also supports our entire team, Adam and his team, as they go into the capital markets, because there's a clear roadmap between what we're trying to achieve, right? So carbon-free, economically vibrant New York, which I think it builds on the great work that the NIPA has done in the last couple of years, but it also stitches together, I think, for the capital markets, the pillars of how New York State's going to move forward, right? Hydropower, better transmission system, canals, and decarbonization and wind, as we heard earlier. So I think it's a compelling and consistent story, and it's also something, back to Lori and Michael's point, that for our state, many stakeholders across the state, including consumers, including customers, including big corporations and nonprofits, I think it drives a very consistent and thoughtful thematic program. So these last two slides are really important from a messaging point of view. So we all appreciate that as well.
And I agree completely, Louis. And I think it's important that we create clarity, not only what we're going to do, but what we can't do. We have to be guardrails. We can't do everything for everybody. So mission creep is always a challenge for any organization when many are pulling on the parameters of that mission. So this well defines and creates, my word, some guardrails to ensure there's good clarity externally as to the capacity that we have as an organization. While we're doing everything we can to optimize and maximize that, there are still limits, and we have our priorities, and this well captures those. So agree completely. Anything else from anyone before we move on? Dennis, Cecily?
You're good.
You're good?
Yep.
Okay, all right, thank you.
This is just a sort of a continuation of the same theme in terms of, what are the outcomes, but from a really environmental and also local economy perspective. So if you look at Central East Energy Connect, 500,000 tons of CO2 reduction annually. The Smart Path and Smart Path Connect project, 1.2 million tons of CO2 reduced annually, as well as NOx emissions reduction. And for the customer, significant reductions since the inception of the program in reducing CO2. And over the 4 years, the expectation is, based on what we see in the pipeline, 80,000 tons of CO2 reduced for our customers. And then on the canals, in our capital plan, we are providing for funds to help address things such as flood mitigation, dam safety, and ice management, as well as investing in the money spent will be invested in those local economies, local businesses, which will spur also economic activity, generating revenues for the state and benefit local communities as well. And important to know that about 40% of the canals are in disadvantaged communities. So those communities will also benefit from the investments that will be made there. Next slide. This is just to show that we built in the capacity for some of the obligations or commitments that were made in the NIPA Renewable Act. There's $25 million annually for worker training and transition between NIPA and the Department of Labor. There'll be an MOU. There's $20 million total for a master plan study at what we call the decarbonization leaders, public entities and buildings that have been identified for decarbonization. NIPA will spend the money on providing a master plan on how they can become carbon neutral. And, you know, we are building in the capacity in the plan. I would say I would refer to this as more of a placeholder than anything else, but to show that we do have the capacity built into our capital plan as this placeholder to do $1.5 billion of projects. But as you know, right now that is a big unknown in terms of as we go through the control process and a strategic planning process through next year, projects will be identified. This number, you know, depending on needs and availability of resources could go higher. So really want to make sure that we've, you know, ensured that there is sufficient capacity over the next 4 years as this strategic plan gets developed around that authority. Next slide. This is the capital plan looking forward. You know, $700 to $900 million a year, significant investments. The major changes are really in the area of the transmission. Some of the projects that have recently been awarded, we really don't see those coming in towards later in the plan, like Propel and East Garden City, but they will start to ramp up over this period. The rest of the investments are somewhat stable over that period, but significant nevertheless, especially as we reinvest in the Next Gen Niagara project and other projects around digitalization, IT investment. We'll show you some of those. And up top is that, you know, 4-year lookout in terms of what we're going to be doing on behalf of our customers in terms of energy efficiency, which is $315 million in 24 and about $1.1 billion over the 4 years. Next slide. This is just showing some examples or, you know, breakdown of the major projects in different categories that line up to those strategic priorities and pillars we talked about in the earlier slide. So it's just putting some specifics around that in terms of dollars, initiatives, projects. The largest really being the Smart Path Connect project. But you can see we have other projects in terms of the hydropower and we mentioned the energy efficiency, investments in our Agile Lab and the canals investment. Part of that is the revitalization of the canals, as well as resilience investments around our sites, our communication backbone, IT initiated projects that we've already spoken about and approved, such as the data center, cloud migration, laying the groundwork for the enterprise resource planning, which is our main core IT system that runs all of our financial functions throughout the organization. And, you know, in terms of diversity, equity, inclusion, this is a projected amount that we will be spending over this period on MWB firms as part of the work we do, ensuring that there's significant investments made into those companies in those areas, as well as small businesses. Next slide. This captures some of the different projects we have around innovation. As we mentioned, the Agile Lab, EV charging stations, the investments in IT, as we mentioned, the ERP, research and development funds, which we are investing in R&D for newer technologies that we can take advantage of down the road, and resilience efforts around cybersecurity, the drone program, and other solutions around how we manage our energy and commodities trading desk. Next. And most of the projects in the plan are continuing from previous plans that have already been approved. But what we've carved out here is sort of what's new to begin in 24. As I mentioned, you know, starting the beginning stage work on Propel and East Garden City upgrade, workplace of the future, account center product management, and some of the canals projects, as well as some joint works projects we do up at the hydro plants together with our Canadian partners. Next slide. And this is the 4-year lookout in terms of our net income driven by our generation transmission margins, and other operating expenses. And really showing that we're maintaining and exceeding the targets for the rating agency metrics, but we do look out beyond the 4 years. Really, we're looking at a 10-year plan overall and ensuring that we continue to be able to fund all the projects that we anticipate over that horizon and making sure that these metrics all hold. Revenues are increasing slightly greater than the rate of expenses, which is good, and keeping those expenses at a manageable level. Next. In terms of the energy markets, we, as you see here, very volatile, and this is why we do hedge significantly and do things to try to mitigate volatility. So the two big sources of volatility we have are energy prices in general, which tend to be volatile, as well as the water flow that's feeding our hydro plants. And that can change from year to year and can change significantly. At top, you could see in 2022 where prices were lower, but had a big spike based on the geopolitical issues going on with the invasion of Ukraine by Russia. As that subsided to a certain degree in the markets, prices then dropped and significantly from what we were observing last year at this time. And we see this over the next few years sort of rising slightly, but leveling off. And the yellow bar is the natural gas prices. And we found over time that the rates we see in the market correlate very closely to that natural gas as sort of we use it as a little bit of a proxy. And this is something that we also communicate with our customers so they understand what the impacts for market rates are on them as well. And we do everything we can to help them manage their risk and hedge on their behalf where possible. Down below is the hydro generation. The gold bar is the long-term average, right? It's just a little bit over 20 terawatt hours a year. And in the last several years, going back to 18, it was significantly above that average. Over the last few years, we see that coming down and sort of leveling off in the area that we show here. But this is a volatility for us.
And Adam, the blue bars for the hydro, that's all water flow. I mean, that's mostly water flow in terms of.
It's generation as a result of the water flow. So if we have less water flow, we have less generation.
So let me ask. I mean, it's an obvious question. Everyone on the call probably knows this except for me. But it looks like the water flow is terawatt hours. Is that right? But it looks like. I mean, I'll be curious to see the curve from 2014 to now, because there's definitely historically more water flow 18, 19, 20 than the last 21, 22, and 23, and forecasted out from 24 through the plan 27, right?
Yes, but you can see that gold bar is the 20-year average, which was lower. So we did have a period where it was above that average significantly, but we always, for the last few years, have been forecasting that it would revert back towards that mean. So we get data from the Army Corps of Engineers, and we feed that into our own hydro forecasting model. And
this is the world of global warming, Lewis, and the ramifications of all of that. I know when I went through this, I had some of the same discussion. Given that what's reflected here for a 10-year snapshot, all of which is well above the average, you'd say, okay, we must have been dramatically below the average, historically. So, yeah, I'm the wrong guy to talk to, rainfall versus melt and all the rest of that. But yeah, that's what's considered here, and that's what this is reflecting and capturing. Yeah,
interesting. That's what I thought it was going to, lead to the impacts of climate warming, global warming.
Exactly. The impacts of all that. I know, Joe, you're nodding. You add your 2 cents to that.
Yeah, I think there's the long-term averages are things that we see in the entire watershed. So those are pretty predictable. But what you're seeing now is depending on a SAISH for all the microclimate stuff that we have, or some of the runoff we have from either Ottawa or other lakes into that watershed, creates opportunities sometimes when there's more water in a more micro view. So all that combined, it's always a challenge to forecast. So we are ahead of the long-term average in terms of what we can predict. And then it's also not perfectly linear. There's water that we can get to a point where we just can't use all of it. So even though there's a lot of water, sometimes we can't use all of it. So there are bounds on that as well. So it's a little bit more complicated than it kind of looks, but you're generally right on. It's those kinds of things that are impacting it.
Joe, that's helpful. Thank you, sir.
The next slide. So, yeah, one of the things that we do show is the growing revenues from those transmission projects, and which is significant over the last few years and really driving some of the major growth in the plan. Those do tend to fall off down the road as that rate formula, the depreciation starts to eat into the rate base, and that starts to go down. But we do see this ramping up as the investments are made and projects go into service. But it does raise the question, well, okay, but what's the impact on the ratepayer? And what this shows is that while the significant growth in revenues of over $240 million over this period, the average residential electric bill, which is $152, 149 of that represents the NYPA share. And over this plan, based on the increase in these revenues, the impact on the rates, we expect to be in the neighborhood of 80 cents on that 149 per month. So really, I would say insignificant increase given the increase in the revenues. But to go to the next slide, that's just looking at it in general terms. But when we take into the impact of what those projects do, they actually reduce costs by alleviating the congestion charges that are currently in place today. So while you have this overall rate impact that you see in the gray chart on the left, there are significant savings, almost double that on the right in that blue and green, with a net savings of $2.20 to the customer bill. So there are significant net savings as a result of these investments to the ratepayer. So it's a really win-win all around. It's good, obviously, for the environment. It reduces certainly our scope 2 emissions, and it allows the state to help meet their goals by making sure that renewables can move cost effectively throughout the state. And its impact to the ratepayers are actually a net benefit, as we showed with the Seek Smart Path and Smart Path Connect are projected to generate $18.6 billion over the next 20 years in total savings.
Adam, if you don't mind, can you go back a slide?
Sure.
Go back. Yeah. So this slide, when I saw, every time I've looked at this slide 3 times, I had the same thought, which is you could put the summary off to the bottom at the bottom right. You could put that up at the top to make the point clearer if someone's looking at this slide about the impacts, de minimis impacts to ratepayers, right? I mean, that's your message for this slide. Yep. Is that $1.49 of our average customer bill of $152 a month, right? So I just thought there's a way to put that up at the top as the message. Again, just for me, I read this slide 3 times and I had to go through it every time to figure out the messaging, which is down at the bottom right.
A good point. We'll make it more prominent for the December meeting.
Yeah, and I only say that because I think all these slides are discoverable, right? Won't these be? They're filed with the state. They're filed with consumer organizations, etc. So that's the only reason I say that. I got it, but after 3 times, I just wanted to make the
Sure.
the summary clearer as a bullet across the top.
Yeah, it's the sum of these two slides, Louis, you're right. You know, we're obviously sensitive to the multiple constituents here. We aren't just investing for the sake of investment.
Yes.
We aren't just trying to spend money because we can or we're asked to. We're doing that with an eye ultimately on our customer and very sensitive to ensuring the net benefits, the net impacts of what we're doing aren't unduly penalizing, let alone, and as is displayed on that prior slide, in fact, beneficial to our customers. So that's a clear part of our messaging here. It isn't just the strength and significance and substance of what we're doing. We're doing it with an eye ultimately on those who are benefiting and the impacts that are favorable to them. Want some clarity on that message. So,
Yes.
yeah, thank you.
Yes, and just shown another way, and these are sort of the three major groups of our customers are cost-based, which are mostly the munis and the co-ops, our economic development customers, and then our governmental customers, and all have achieved significant savings with our rates versus what they would be seeing otherwise in the market. And even as we look forward, we see even more savings for next year, particularly for our governmental customers. We recently reduced some of their fixed costs that they are paying under the long-term agreement by approximately $11 million. And we also entered into a hedging transaction to help them lock in their costs for about 300 megawatts of power that we're previously purchasing in the open market. We've been able to fix those for them. And based on the forecast of where energy prices are going next year, that will end up saving them significant amount of money, especially in the time when a lot of those governmental customers' budgets are now being stressed with a lot of other external factors weighing on their budget. So I think they see some significant savings out of being an IPA customer for sure.
Well, just to clarify or repeat that, Adam. So I'm trying to marry up the last couple slides here. So the one you have in front of us is a look back slide, right?
Yep.
The slide before that is a look forward slide.
Correct.
So if I marry up the two and look forward, are you saying the savings trends will remain consistent, will improve, will diminish?
Well, as we see next year, we think the savings trends will improve for some of the customers, the governmental customers in particular. They'll see significant savings next year. The other groups will also see savings if energy prices rise as are expected because their rates are fixed. Our cost-based customers have a very significant discount, as you can see, 57% savings versus the market. Those do increase over several years as required by law because they are cost-based. So as our costs get calculated against their rate base, if those are going up, that'll be passed on to them. But as you can see, it should be very manageable because of the significant discount that they're seeing to the market. So that is a requirement by law. We'll be coming back and talking to you about that early next year. Next slide. And then this is a breakdown of our expenses by general categories. Again, trying to hold the line and keep expenses in a manageable range as a 2.6% overall increase year over year. 2.7% in the largest category, which is payroll and benefits. So overall, that also remains within a tolerable increase. So making sure that expenses are being managed.
And at the same time, you're comfortable that this reflects sufficient resources to execute the plan. I mean, we're not we've got the capacity, the organizational capacity to deliver these outcomes while managing the level of investment we're making in our own people, team, and infrastructure. We are stretching the rubber band too far here.
No, that's correct, Chairman. So, you know, I mean, this doesn't assume everything is fixed and just goes up by this percentage. There are things that are increasing more because we're leaning in and making an investment on a discretionary basis. And in other areas, we're seeing significant savings and efficiencies that allow us to make those greater investments in initiatives. So this is sort of the net of all of that, but ensuring that, you know, we're doing what we need to do to be able to meet those challenges. You know, headcount growth we see over the next few years, we've provided in the plan the ability to meet what we think will be the future needs of additional hiring that we may need in a way that we think is also manageable. But we understand with the increase in responsibility, certainly under the new renewable legislation, that you know, we will be needing both internal resources and external resources to help us bring those initiatives to full conclusion and successful execution.
Without yet knowing exactly what's expected of us, but yeah, okay.
So that's really the wind up there. Any other questions? Again, we'll take back some of the comments and make sure that we address that when we come back again in December. But again, thank you for letting us walk you through all of that. It's a lot of material, especially the material that we've provided previously. And so it's a lot to go through, but certainly if there are any questions, let us know, and appreciate the feedback we've gotten so far. And then also thanking the staff for all the work that they've done. A lot goes into it, not just with the finance staff, but the entire organization is heavily engaged in this financial planning process. So it's really, you know, a collaborative effort throughout the organization.
Well,
I'm sorry, Mr. Chairman.
Go ahead,
I was just going to say, Adam, that one, I think your package is informative, thoughtful, well-researched, and very clear. So on behalf of the board, appreciate the prep work that went into this from the team last week's session. But it's really well done. So please pass on your kudos to your team from us. One clarifying question for me: when you think about the workplace of the future, is that your new headquarters building redesign, et cetera? Talk to me. I mean, that's what I thought from going through the materials.
Again, that is. Yep.
Yeah, go ahead, Adam.
I was just to say, again, that is also sort of a placeholder in terms of ensuring that whatever outcome comes from all of that, we have the ability to meet, you know, those needs and planning again for the future.
Okay. And I suspect for a December meeting, you'll have another set of comments around your thinking with regards to your headquarters and, you know, workplace for the future, et cetera.
We will. Yeah. We'll have something for you in December. I don't know how it links up the date of our meeting with the conclusion of the RFP process, but we'll be able to whatever we have at that moment in time, we'll be happy to share, and we'll update you at that point.
Excellent.
Adam, as you guys pulled the numbers together and dealt with your counterparts across the organization, what do you deem the most significant execution risks in this plan? What is it that gives you guys collectively? It's a question really for Justin, Joe, and others. What is it? As hard as planning is, it's the easy part. You know, it's the execution that ultimately is the proof of the pudding. So just editorialize for a couple of minutes as to what you guys deem the most significant execution risks as you look ahead for the next 4 years.
Yeah, I mean, I'll start, and then others can, you know, jump in for sure. You know, a lot of it is, you know, not only building the financial capacity, but also building the organizational capacity, and whether that's with internal resources or external resources, partnering with those and the availability of that. we still face significant supply chain risks. There is still very significant lead time on various items that are necessary for projects. So that is a a headwind in terms of being able to execute with the speed that which we would like to. And I would see those as significant challenges, but also it's an ongoing effort that we've been doing as these new things have emerged, but constantly looking at prioritization and making sure that the rest of the organization understands and is aligned with what these goals are and what the priorities are, and that we're able to also shift attention and resources to the things that have risen to the top of that priority list, and identifying areas that we can either phase out, pull back, or not have to spend as much effort and time doing today as maybe we did a while ago. So being able to be nimble, shift, acquire, retain talent, and manage those supply chain headwind issues that we're confronted with today. I would characterize those as the things that I see from where I sit.
And I would just add to that. Thank you, Adam. As we've all read, there's a lot of change underway in the energy landscape and in the transition, and so there'll be churn, but with that change and that churn comes opportunity too. So there's opportunity for NYPA, I think, in this sort of transitional period. I would also say, as we talked about last meeting, we continue to have a challenge around canal infrastructure, which is a key obviously element of our 4-year plan here. So that'll be a continuing issue for us and challenge as that 200-year-old asset continues to need care to make it safe and secure for the state's residents.
May I ask a question? It's really not one that we can control, but to your knowledge, are the other economic development agencies in the state trying to solve the supply issues by the way they're trying to entice people to come to New York? Is there work being done in that arena to close that gap?
I would say yes. I think that's it's a long-term effort, right? You see great evidence of that just in terms of the effort to attract the chip manufacturers to address shortages there. In our industry, there's an effort to have renewable energy generation equipment manufactured in New York, such as wind turbines and other components of renewable generation. So I think it's a major focus, and I think I know a lot of work is being done.
Thank you. I wanted just to put it out there that there are efforts at solving some of that supply chain problem.
Yeah, absolutely.
Joe, anything you want to add from your seat?
I would just emphasize and maybe just a little more focus on some of the things that are already spoken to. So, workforce is certainly one of the key issues. There are some key areas that we've already identified that we're tackling with our own HR and recruitment around system planning capabilities, with a number of studies that we have to do with all the different scenarios. All the resources across the industry are taxed in that area. So whether it's New York ISO, consultants, they're not easy to get either because nobody has the capacity to do it. So we're building some of those competencies in-house to address that. And of course, the blue collar workforce, work with workforce development to make sure there are people who can actually install the equipment that we're planning for. On supply chain, where we're seeing that is over the years, over the decades, really, certain specialized pieces of equipment, large primarily, so say turbine wheels, transformers, things like that. A lot of that supply chain has been globalized over the last several decades, and now there's a focus on trying to get that shore up as well in terms of getting some more regional support in those areas. We are actually also negotiating our way into the certain queues that we have, prioritizing one transformer over another in our own plan to make sure we can get those in time. And then all that kind of governed, in a kind of machinery way, by the capacity. We are doing a lot of work with Adam's group on building the competencies in our own project delivery team to make sure they understand where the pressure points are in our financial capacity to make sure that all the ratios that Adam needs to continue to fund this work are there as well. And I think just to Trustee Morris's point, there is a lot of co-innovational risk or just around our partnerships with folks. There's just making sure that we have willing partners. People are as aggressive as we're trying to be in some of these key areas. And we'll just continue to collaborate with our customers and other fellow agencies on those as well.
All right, that's helpful. Yeah, I mean, capacity building, we've been at that for a number of years and becomes all the more important. And as we've chatted for much of the last half hour, 45 minutes, or for multiple months, resource allocation, where we spend our limited, we don't have limitless dollars in funding, intellectual capital or otherwise, becomes all the more challenging. The canal's infrastructure is, as Justin referenced, we can't do it all. We need help, et cetera. So yeah, there's a lot here. Partners, how we bring others to the table and continue to do that in an increasing way. So, all right. Well, appreciate those thoughts and comments and perspectives. And unless there's anything more to come before us, again, what was just presented is an exec summary of a much more in-depth presentation that we all had the opportunity to review in detail. I'd ask for a motion to bring forward the plan for adoption by the full board next month.
So moved.
Thank you, Dennis. I have a second.
Second, Lewis Warren.
Thanks, Lewis. Any further comments or questions? Otherwise, all in favor, aye.
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 Any opposed? Motion carried.
Chairman, I think Trustee Whitlock has a question.
Yep, go ahead, Laura.
Thanks. And thanks again, Adam, and to the entire team. Obviously, a lot of time has gone into this, and there are so many different aspects we have to be aware of, but I feel that you've put them in this presentation, as well as the flexibility we kind of need to shift as things come forward. Can you talk a little bit more about the hedging? I think the hedging is such a crucial part of all of this. And so, just some things that you all have learned over the last couple of years. And then I really appreciated that you spent time talking about how you are talking with the customers, how they can better hedge. I think that's really pivotal to all of this. So if you could spend just a minute or two on that, and then maybe, a little bit more emphasis at the board meeting next month, I think that would be really helpful and appreciated. So thank you, Adam.
Yep, and we appreciate the comments and the question. So the hedging program is important, and what we try to do is, we're not trying to speculate or try to game the market. We do know it's volatile, so I would liken it to sort of a dollar cost averaging type of strategy where we gradually chip away at locking in future sales as a hedge to avoid some of that volatility on a day-to-day type of basis. And we try to do it with a 3-year cycle look forward with certain percentage goals for each year. So for example, where we'd like to be at this time of the year is at least 65% hedged on our assets. And a lot of that is around the hydro facilities. Some others are operated on more of a merchant basis. And some of our facilities, especially the peakers, are really available on an as needed basis. So we try not to get ahead of those, because that could create sort of an oversold position. But again, trying to we chip away at a regular basis over the years. We have regular check-ins to see where we are versus those goals, and ensure that we have a sufficient amount of sort of downside protection, and making sure there's not giving up all of the upside, but also accounting for the fact that there could be changes, because a lot of this is around our merchant capacity. That if there's a customer that comes in and takes down additional load, that we can account for all of that. Changes in the hydro flow, other constraints around, generation, so that we feel that we have some protection on the downside, but not being sort of in an oversold position. So
Yeah,
so far it's
Adam,
worked out well for us.
Yeah, I mean, it raises the point. I know you guys typically give us kind of an annual review of the hedging program, look back, look forward, lesson, how effective has it been? How does that impact your, forward-looking plan? So we've got that coming up where we'll have the opportunity
Sure.
to, dig a little deeper there, okay?
Absolutely.
Okay, thank you all. Appreciate that.
And then just a follow-up from last meeting, because I know that you requested just to see the update on the bond sale that we had approved at the last meeting. We're expected to close that on Thursday, and the sale was very well executed. Obviously, we're in a higher interest rate environment. There's nothing obviously we can do about that, but what we can do is execute as best we can relative to where the interest rate curve is at the moment, and we accomplished that through a very heavy marketing effort, and which we did. We did significant marketing outreach to investors, attending investor conferences, investor meetings, and really getting the word out there. Also, we were able to tap into the retail investors, which had not been as prevalent in the last few years, but really have started to show up given where the market is right now. So we had a retail pre-order period. We had over $600 million of orders, 220 million of that we were able to actually use, and going into our institutional pricing day, and we ended up being 5 times oversubscribed in our deal, which is significant interest in the investor community in our bonds and in our projects. So that was very well received, allowed us to tighten up the pricing. So we actually priced 24 basis points in tighter than we did last year with the inaugural deal that we did, and we were even able to achieve a pricing on this deal that actually priced through a comparable AAA rated New York City transaction that happened the week before. So for our standpoint, even though our paper is rated AA minus, it traded where other AAAs are actually trading. So I think we're very happy with the results there.
Yeah, that's great news, and appreciate that update, and kudos to you and everyone involved there for a very, very efficient execution. And I think concerns about timing have, been well refuted in terms of, frankly, we're in early, and when you've got a paper that people want, and being oversubscribed 5 times speaks for itself. So very well done there, Adam and team.
Thank you. Appreciate it.
All right. If I can, next on the agenda is our quarterly allocation of funding for canals. This is teeing up first quarter of 24. Adam, anything of note relative to canals operations that we need to be aware of before asking for that motion?
No, this is based on the proposed budget that we just presented, and if there are any changes that come up between now and the final, obviously we'll come back and let you know, but this is what we expect will be sufficient for the first quarter.
And Canal stays on plan, on budget, and at least no significant variations therefrom. Joe's giving me the nod, yes?
And no surprises right now.
Okay, great. Well, unless there's any other questions, I ask for a motion to approve the $27 million, or approve recommending the $27 million to the full board for adoption.
So moved.
First and a second were there. Any other questions? Otherwise, all in favor? Aye.
Aye.
Any opposed? Motion carried. I've got a couple other items to come before us today. Ricardo, you're next up on the lineup card here. Project Control Services Value Award, Contract Awards.
Sounds good, Mr. Chairman. Good morning, Mr. Chairman, trustees, and everyone. My name is Ricardo DaSilva, VP of Strategic Operations. My pleasure being here today, requesting committee to recommend for approval 9 program control service contracts in the aggregate amount of $30 million over the next 5 years. As we just heard from Adam, the authority's existing and future portfolio requires further emphasis on class-leading project and program controls to support the Power Authority and Canal's project and programs. Successful project delivery is underpinned by having strong program controls in place to develop and manage schedules, costs, documentation, and billing in a consistent way to deliver project outcomes. And as the chairman referenced earlier, planning is hard, right? So we're really looking for these services and these firms to help us with planning over the course of the long term. These 9 firms will complement the internal project and program controls group with niche skill sets and resources to further centralize and bolster services to support project implementation teams, to manage delivery that is on time, within budget, and with the necessary documentation to meet regulatory requirements. We received a total of 33 proposals that were evaluated by a cross-functional team based on their technical ability as well as commercial competitiveness, ultimately resulting in these 9 firms demonstrating the ability to meet the terms and conditions, achieve MBE goals, and support the large projects and programs with scheduling, cost management, document control, and billing support services. 5 of these firms are New York State certified minority business enterprise suppliers. We'll be looking to set these up as master service agreements where work will be mini bid and is expected to then be assigned and distributed across these multiple firms. At this time, be happy to take any questions that you may have.
Ricardo, go ahead, Louis.
I was just going to ask Ricardo for good fiduciary order. You use a consistent evaluation grid as you evaluate all 33 of these proposals.
Correct. We do, trustee. Yeah, we have criteria that we establish in advance. We apply that consistent criteria as we evaluate, in this case, all 33 of the proposals, working very closely with strategic supply management and other stakeholders internally to make sure that, again, that evaluation is carried out in a very fair way. Absolutely.
Well, staying in that general theme, Ricardo, so does that imply the other 24 weren't deemed qualified? The good news is we had 33. Oftentimes we're challenged with the number of respondents. So I'm pleased to see 33 and a diverse group of respondents and the rest. But how significant is it that you have 9 versus 12 versus 6? Is that a function of the other 24 weren't deemed qualified, or you don't need more than 9? Just give us a little more context, please.
Sure, Chairman. Yeah, it's a combination of all the above. In some cases, it's terms and conditions or not really meeting the MBE requirements as an example. In other cases, it's having the technical aptitude, really the bench strength that we need to carry on these large programs. So it's a mix. It's a mix, but ultimately these 9 is they're meeting the commercial requirements, the terms and conditions, and we believe really have the bench strength to complement our existing internal teams that we have in place.
I guess my simple question though is, so the other 24, were they just deemed not qualified because they didn't meet whatever criteria you've established, or no, there were more than 9 that were deemed qualified and we've just selected these 9? I'm trying to understand the winnowing process here and why or if any qualified firms were excluded or aren't part of the recommendation.
Yeah, Chairman, it's a good question. We had specific criteria established where we wanted to really meet a minimum level of that ability when it comes to planning and scheduling and that cost control, which is going to be so important for us to carry out. So in some cases it was sort of flat out not meeting the requirements. In other cases it was peeling that onion a little bit deeper and deeper as we review the proposals, interviewed, got to know the proposal a little bit better, and ultimately selecting these 9 that we felt were an appropriate mix at this point for what we have ahead of us.
And we give all of them feedback on why they didn't make the cut and what they can do to
Yes.
further improve themselves to be better qualified for future opportunities with us?
Yes, yes, yeah. That's part of that is we'll work with SSM or Strategic Supply Management Procurement Groups on sharing that feedback with the suppliers. So part of it is upfront as we work through negotiating terms and conditions. Again, with these 9, to optimize, and then the other piece of it is subsequent to approval, we'll work with again SSM and communicating with the other vendors. We do want to share that feedback with all the vendors across the board to again maintain that relationship with them.
All right, happy to see that you say over 50% of the vendors are MBE firms. So
Correct.
that's positive to see in terms of that trend. Any other questions for Ricardo? If not, I'd ask for a motion to recommend this item to the full board for adoption.
So moved.
Second.
Thanks, Louis. Second, Dennis. All in favor? Aye.
Aye.
Any opposed? Motion carried. All right, next up, Andrea, Guy Park Manor. The costs continue to grow. We need additional dollars.
Yes, good morning, Chairman and trustees. Today I am going to present to you a change order to VMJR Companies of Glens Falls, New York for the Guy Park Manor Rehabilitation Project Phase 1. We are requesting approval to increase the contract value by $2 million and increase the contract term by 1 year to August 2025. Guy Park Manor was built in 1774 and is on the National Register of Historic Places. The Manor House sustained significant damage from Hurricane Irene and Tropical Storm Lee back in 2011, prior to the transfer of the canals to New York Power Authority. Canals at that time was operating under New York State Thruway Authority, and they coordinated with New York State Parks to quickly and temporarily stabilize the building and the site walls along the canals. At that time back then, Canals also applied for a FEMA funding grant to partially fund the project. The grant was finally approved last year in 2022. 2017, New York State Canal System came over to New York Power Authority, and excuse me, I'm sorry about that. And that same year, we launched the Reimagine the Canals competition to identify strategies for revitalization of the canal. Following the competition, a task force was convened to build on the ideas submitted. Reimagine the Canals initiative was then launched in 2020 with the publication of the task force report and announcement in the governor's State of the State address. Guy Park Manor is one of those 5 original projects from the task force report. The overall project has 2 phases. Phase 1, which is Guy Park Manor's rehabilitation, and Phase 2, the environmental, educational, and resiliency part. Guy Park Manor Phase 1, the scope includes rehabilitation and storm hardening of the historic Manor House, which by the National Historic Preservation Act is required to have historic character and its architectural integrity retained. Design was completed mid-2022, and the subject contract for Phase 1 was approved by the trustees at their July meeting in 2022 for a term up to 2 years and an amount of $9.5 million. Additional scope was identified post the abatement of hazardous materials as underlying conditions were exposed. Due to safety concerns and the presence of the hazardous materials, the building was not able to be fully accessible to identify or anticipate the conditions that are starting to be discovered. The requested $2 million change order will bring VMJR's contract to $11.5 million. Additional work under this change order will be verified and tracked on a not to exceed time and material basis. The building is scheduled to be lifted in the spring of 2024 with anticipated construction completion in mid-2025. Overall project cost prior to this change order is estimated at $36 million. Phase 2 design will be complete early next year, and construction bids are expected in July of next year. As the design for Phase 2 is nearing completion, scope has been refined to stay within the range of the original project estimate. But until the construction bids come in next year, this is a risk that the team will need to manage. Bids are due in July, and at that time, the contract award and the final project estimate will be brought back before the board for approval. Funding required for this change order will be budgeted as part of the annual budget cycle and is captured in the long-range plan. Happy to take any questions at this time.
Cost creep, it is what it is, right? No other red flags here, right, Andrea?
The engineering team and the construction team have really worked closely together the past few months to try and flush out everything that could be anticipated. So we feel like this $2 million will cover us through the building lift. And as mentioned earlier with phase 2, the team really has narrowed in to keep the scope within the parameters of the original cost.
All right, unless there's any other questions for Andrea, I'd ask for a motion to recommend this item to full board for adoption.
So moved.
Thanks, Dennis. Second. I heard a second in there. Again, any other questions? Otherwise, all in favor? Aye.
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 Any opposed? Motion carried. Thanks very much, Andrea.
Thank you.
And Maribel, talk to us.
Yeah, good morning, everyone. Thank you so much. So, good morning, Mr. Chairman, trustees, NYPA colleagues, members of the public. We're asking the committee to recommend that the NYPA Board of Trustees approve the addition of $20 million for the continued implementation of the Municipal and Rural Cooperative Electric Utilities Electric Drive Vehicle Program, long title there. As referenced in the board memo, this program helps NYPA's municipal and rural electric cooperative customers finance electric and hybrid vehicles for their fleets and any associated battery charging equipment. These customers repay NYPA over a 3-year period, and to date, there have been no repayment issues associated with these loans. As background, the trustees first approved and authorized $1.2 million to finance this Muni Co-op electric drive program in May of 2003. So it's a 20-year successful program. Since then, staff have sought and NYPA trustees have authorized additional funding for the program in February of 2009, December of 2013, January of 2017 and 19, and July of 2021 for a total of over $12 million. This funding opportunity has led to 101 electric or hybrid vehicles being purchased and financed from 25 of our municipal and cooperative systems. That's just about half. And many repeat participants. These include low to medium duty fleet vehicles as well as bucket trucks. This program is funded from commercial paper note proceeds and or operating fund monies. Petroleum overcharge restitution funds or POCR funds allocated to NYPA will be used to offset internal interest charges. Customer feedback has been overwhelmingly positive as customers look to add or replace less efficient fuel vehicles with electric alternatives. And an added benefit, of course, to the communities is the reduced maintenance expense and reduced transportation pollution across the state. This item is submitted for your consideration and recommendation for approval to the Board of Trustees. Happy to answer any questions.
We're the financing vehicle for this, right? I mean, we're not we're the intermediary. We're funding it. We're financing. We're not funding. We're financing. Is that correct?
We are financing. Correct, Chairman.
Okay. And so this is in response to customer demand for more support. Didn't we, like when we were up in Fairport end of September, didn't they reference this program or something similar?
Yeah, Fairport is actually one of our largest participants in this program. And, they've been pretty active almost since the inception of this program. And so I'm very grateful that you brought that up, where yourself and the rest of the board were able to see firsthand the pride that they had in the electrification of their fleets, whether it's, light or medium or the larger bucket trucks. And so it is growing because of customer interest. And as NYPA has taken on a role of trying to accelerate and support the acceleration of fleet electrification, this continues to be a very popular program.
Is it something we promote? This enables us, or we're looking to enable this transition, in the municipalities. So we're actively promoting this?
Absolutely, yeah. So we have key account managers across the state who talk about this program, but also our dedicated Muni and Co-op, which this program is dedicated to, our Muni and Co-op customers. It's something that we speak to them a few times a year on.
Okay. Any questions for Maribel? Otherwise, then I'd ask for a motion to recommend this item to the full board for adoption.
I'll make the motion, trustee Warren.
Thanks, Louis. Thank you, Michael. Dennis, all in favor? Aye.
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 Any opposed? Motion carried. Thanks a lot, Maribel. Yeah, keep pushing the message. Keep selling. You know, we're here to enable, facilitate, and accelerate. So good work.
Will do. Thank you all for your support.
Thank you, Maribel.
All right, last item on our agenda is the consent agenda, which hopefully everyone's had a chance to review in advance. And unless there's any questions anyone has relative to the several items included there, I'd ask for a motion to adopt the consent agenda as presented.
So moved.
Thanks, Dennis. Have a second.
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 Thanks, Michael. Louis, close third. All right. All in favor? Aye.
Aye.
Any opposed? Motion carried. Unless there are any other matters to come before us, I'll ask for a motion to close the meeting.
So moved.
Thanks, Dennis.
Second.
Thank you, thank you, Cecily. Our next meeting will be at a time yet to be determined. The notes say here. With that, I'd ask for a vote. All in favor? Aye.
Aye.
Any opposed? Motion carried. Meeting completed. Well done, team one and all. Great work, Adam and team on the plan. Justin and team, we look forward to some great execution. Thank you, fellow board members. We wrapped this one pretty much on schedule. Have a great day. I'll talk to everyone soon. To the extent I don't, hard to believe Thanksgiving is less than 10 days away or a little more than a week away. Have a wonderful holiday with your family. Much to be thankful and grateful for. Like I said, talk to you soon, and we'll see everyone in December for full board. Have a great day.
Okay. Thank
Thank
you,
you.
Chairman O'Malley.
Thanks, everyone.
Happy
Thank you.
Thanksgiving.